All right, guys, this is Paul Singh, the market speculator, with the trade report for Thursday, August 27th, 2015. First things first, let's take a look at the futures. Now, we've been watching the futures every day since this market sell-off, which is why I've been doing the reports in the morning so we can hit the pre-market goings on. And this is really the first day where not a lot going on. I mean, on a normal day, 0.8%, 0.7% is a pretty significant move, but in this market doesn't mean a whole lot. So we're not getting those 2, 3, 4% pre-market moves. So for us right now, a relatively docile opening, and we'll be up a little bit. Now there was a change yesterday in that the market did not reverse from the open. The trend, the mini trend has been if it opens way down, it'll recover at least a little bit by the close. And if we open way up, it's going to give that up at the close. And that didn't happen yesterday, which was a positive. And we had some signals during the day. I've got the 1 minute chart up, which I use for day trading. Don't usually apply it to my swing trading. And I get this question all the time. Paul, do you look at the intraday charts when you make your swing trade decisions? And almost always, 85, 90% of the time, the answer is no. But in this market, I think it's worth doing, which is why yesterday was the first day we jumped into the market for a swing. And, I try to play it safe when this is going on for swings. Now, there have been great day trading opportunities for you who can do that. But for those of you working who basically have to hold for a few days, which is what swing trading is about, it's too risky because there has been really no rhyme or reason for what happens the next day in the market. So, but yesterday there was a little change. When we entered UPRO, which again is the 3-time leveraged SPY ETF, you can see here I have the 1 minute chart pulled up to see what I was looking at. And we saw some buying interest in this kind of bottoming formation, and it started to recover. You could see UPRO here. There was nothing really telling us there was going to be a reversal. That's not to say you couldn't. It couldn't reverse by the close, but it felt like a strong hold here, of the lows. So we entered around 51.60, and we actually got up to 54.60 at the close. So a strong close. And I'm getting a lot of questions about the day trading, which I don't really focus on too much in this report. There were a number of trades throughout the day here with stocks like Google, Netflix. Intraday, what I'm looking at is oversold levels with these bullish engulfing patterns or tails at these lows. It's been these type of reversal type plays have been big money makers the past 3 or 4 days. And then yesterday, almost all the leading stocks and indexes broke their opening high. And that was the time to get long, about within an hour into the close. And you can see here with UPRO, it was a slam dunk, a breakout right here at 53, and you had a $1.60 move there for a day trade. We can go just about anything here that's a leader, that's a market leader, which is what you want to be focusing on right now. Google here, when it broke 648, 649, that was the slam dunk trade. Netflix here, same thing. And this was also has been a great buy the extreme oversold dip intraday type trade. And then you can see here when it started bottoming, kind of a cup and handle here. Great entry here. And then it actually, unlike Google, did not really make a big move past its opening high, but I know a lot of people did get long in this area. So that's kind of what I've been looking at least yesterday, intraday. We can go back to Google for the intraday. Let's pull up the 5-minute chart here. And if we can get back to the 24th. Now, we talked about this on Monday morning when we had the huge sell-off that there could be an overreaction and a bounce, and we used that to stay in Google. So our two positions going in were Google and Amazon. And you know, the market tries to take advantage of the fear and the people selling out at this point. You know, we've talked to death about how we stuck with it and what to do here, but since I've been getting questions about what I've been doing intraday, this was also, although I was holding it as a swing, I was day trading it. And you can see here, we had the overreaction and then the retest of that low, and that was strong. And then we got this kind of bullish engulfing here. It shows up more on the 1 minute than the 5 minute, but I can't pull it back as far on the 1 minute. But that's where I got long for a day trade. That was very successful. And kind of the same thing with VIX and shorting VIX. You know, key in on the volatile leaders, and that's also what we're doing with swing. You want to key in on a few stocks. It doesn't really pay to be watching 100 stocks right now. For us, again, we're watching UPRO, which is what we're using for the index, the volatility measures, VXX and XIV to short, Netflix, Google, Amazon. Those are the three real, I would say, leaders right now. And then we've got MBLY, GPRO, UA, CMG, SEDG, Apple. And now I'm going to be watching Facebook for a gap fill, which we'll talk about in a second. And though I haven't traded it at all, day trade or swing, I have been watching biotech here just because, you know, that over the last few years, that's what you want to watch. And nothing I've wanted to trade yet, but we'll see. Maybe if it climbs up over the 200-day and closes, that would be a very good signal, not only for biotech itself, but for the market in general, just because biotech has been a big leader. So let's what do we do now? Let's get back to our normal swing charts here. And if we look now, where can we go from here? Now, first of all, let's review. We talked about this again Monday morning before the market opened, you know, when we were gapping down here, that we were keying in on that October 2014 low, got right to it here and bounced. And now we've got this bounce here up to 194. There's a gap fill here at 197, 198. That is going to be a key level for us here. Now, can we break, and also that gap fill, and let's see if the gap fill actually closed. We closed here at 197.63, and intraday we got up to 197.48. So it has not closed yet, just about did, but it is still open. And intraday on Monday, we actually did, you can see these support levels, which I talked about in a blog post on my personal site, The Market Speculator, about these supports and how they go right, even during these sell-offs, how strong they can be. And we can see that with SPY here, went straight to the 2014 low and bounced from there. And then in that same day, went right up to the gap fill and pulled back. So you can see how, you know, when people who don't really pay much attention to technical analysis or try to put it down, you know, there's no denying this stuff here. Support, resistance, and Monday was textbook here. And now we're trying to break this, at least close this gap. So that's what I am using for my initial target with the UPRO trade we took yesterday. So now the issue is, do we fill the gap here? And on all these leaders, Netflix, Google, Amazon, and I talked about this in a tweet for Netflix yesterday, but we're watching this gap fill level. That's a good spot for targets. And then we see from there, can we bounce any further? You know, if we can get past these gap fill levels, that's another strong sign. And then we look to these converging moving averages here a little higher. But that's a ways to go. Let's see if we can get there first. Let's go to Netflix, which we talked about yesterday. You can see here, what I talked about in the tweet was, if we can get past the 50-day moving average with a close, and you know, I was talking about 107, actually closed up at 110. You know, maybe I'll enter on a pullback here. And even though I was watching it, I did not want to take two positions into the close because again, you never know with this market what's going to happen. So stuck with just UPRO. You don't want to get caught off guard here when the market can do just about anything. But we talked about this gap fill as being a target, and we're almost there at 112. And then we'll see what Netflix can do. Now, maybe this morning, if it pulls back in a little bit to 107, because this is the first time it actually closed here. It's tried 1, 2, 3, all 3 days during the sell-off. It's tried to close over the 50-day, did not do it. And yesterday, finally, it did it. So maybe if we get a little pullback and can get in at 107, 108, we can play a move to 112. And normally this would be a swing move, but you'll have to be quick today. Maybe it turns into a day trade because of the volatility here. It could easily take out 112 and within a few hours. So I would enter it as a swing. But those of you working have the expectation that a trade alert could come out same day that we're out of the position, even though we're not technically day trading it off intraday charts or anything. So 107, 108, up to 112 here. And then if it clears that 112 level, you could be off to the races here and maybe hit this gap fill at 121 or just this round number here at 120. So Netflix, one to watch. Google has been the leader during the sell-off here. Now, textbook gap fill here that's why we follow gap fills. You can see how strong they are. Textbook gap fill, now strong bounce and finally above our entry level. So validates us holding through this, not getting too scared during the sell-off. Entry here was at 652. We're back up to 659. Back. We talked about this earnings catalyst and just how good the earnings were here. That we still believe, even during the sell-off, that Google is a strong stock, that it's going to lead the market, and it has. Now, hopefully, we can get back up to 700, and when it does that, we can talk about 750 again. But let's not get too far ahead. Specifically, right now, the gap fill here is at about 678. So we're going to be watching that closely. Now, our other position, Amazon, not leading quite the way Google is, but strong move here, 7% yesterday, one of the strong stocks during the day, up to 500. This one is still not back up to our entry, which was 520, was 523 or 525, somewhere in there. 525, and then our initial stop was in the 513, 515 range. So we're getting back to at least our initial stop level, which makes it only a small loss rather than this big loss. And then we'll see if we can't get back up. I don't think I'll get out at that level. I'm going to see if we recover here with Amazon. Now let's quickly review a few of the other stocks we have been watching. MBLY has been leading, looks pretty good here, got the strong bounce, it is now basing, now wants to see if it can get above its 50-day moving average. Maybe you take a shot pre-break here and see if it can rise above there. GoPro had been leading, but intraday on some of these days, but now looks kind of ugly. So it might be time to take GoPro off the list. UA still looking good. CMG relative strength wise has not even broke its 200 or 50-day moving average. So very, very strong stock here. Maybe this is the time to get in now. Never did break, even during a sell-off, held these levels. That is a big time positive for this stock. So might be a good spot to enter. And maybe, if the market bounces, not only does it hit its high at 750, but actually breaks out. Apple, no key levels for us here, except for maybe rising up to its moving averages, which we could play. And then my new addition here is Facebook, just because we've got a gap fill and converging 50-day moving average. So maybe we get a bounce into it. And I would only enter here just because it's only 3 points now. So I'd only enter on a bit of a pullback. So, another thing I wanted to talk about today was what I got a lot yesterday was on this UPRO entry. Some of you took it with me and you're up, doing nicely here with that 3-point gain already. Some of you told me you got stopped out, and that's a concern. You should not have gotten stopped out. If you had to use that tight of a stop, in this volatile, keyword volatile market, you need to probably take a smaller position so you can widen your stop. When you're entering, we entered at 51.60. That means, you probably only had a point to point and a half stop, which in a normal market might be fine. In this market, where you have moves that are, just on UPRO, on a $50 stock, you're getting intraday, maybe 12-point moves, or even 5 or 6-point moves is enough. A dollar stop is not enough. And you need to be at a key level. You don't want to get stopped out when it's still a good position. So when we entered at 51.60, it came back down into the 50s, which was fine. That's just natural volatility. You shouldn't be concerned at that point. We used yesterday's low because then it would be a concern. That's a natural level to want to get out because you've broken something key, that low of the previous day. So, if you're getting that position, you need to have your stop down here around 48.50, 49, in order, one, to give yourself a little wiggle room in terms of the volatility, and two, to keep yourself in a good position that hasn't violated anything. So that's one thing I want to talk about. I got a number of you who got stopped out when really you should not have. So that's what we're looking at today. Now we're expecting, at least at the open, a bounce, and it looks like we're going to bounce slightly. We're targeting these gap fill levels, and if the market can do anything right now, so maybe we get stopped out, and that's fine. We're going to keep the losses small on this position. We're not going to allow what happened with Google and Amazon, managing risk tightly, but hopefully we get this bounce to these targets we're looking at, and then we're going to try to play until the market tells us otherwise. Right now, we're going to try to play maybe one or two other positions if we get a little bit of a better entry to the gap fill levels in a lot of these stocks and the market. So that's it for the trade report. I will see you tomorrow.